Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
Hey crypto fam, welcome back. Buckle up because we've got a wild mix of news to unpack today. Big banks enter the Bitcoin arena. Breaking news. Both JP Morgan Chase, the U.S.'s largest bank, and Wells Fargo, the third largest, have revealed holdings in Bitcoin ETFs. Is this a sign of mainstream adoption finally happening? We'll analyze what this means for the future of Bitcoin. Bitcoin price. Update. We can't forget the OG. Let's take a deep dive into the current Bitcoin price action and see what's happening on the charts. Fed hints at rate cuts. We'll break down recent comments from a Federal Reserve official regarding a potential rate cut and its potential impact on the crypto market. Sam Bankman-Fried's trading hustle, the saga, continues. We'll explore the surprising story of Sam Bankman-Fried, the crypto billionaire, reportedly continuing to make trades even while incarcerated. Bybit joins the transparency train. Following Binance's lead, Bybit, another major crypto exchange, has released information about its reserves. We'll discuss the implications of this move for the industry. Stay tuned, crypto fam, as we dissect these stories and provide insights to help you navigate the ever-evolving world of cryptocurrency. Don't forget to like, subscribe, and leave a comment below if you have any questions. Hey there! So, JP Morgan Chase, which is pretty much the Goliath of American banking, just let the cat out of the bag with a filing to the SEC. They've got their fingers in the Bitcoin pie, specifically through spot Bitcoin ETFs. And guess who's behind these ETFs? Big names like BlackRock, Fidelity, and Grayscale. Now, before you think they're going all in on Bitcoin, hold up. The dough they've put into each ETF isn't exactly headline-making, especially when you stack it up against the mountains of cash other big players are throwing at Bitcoin. But here's the twist. JP Morgan's not necessarily betting on Bitcoin's wild ride. They're playing the role of a market maker, or authorized participant, AP, which is Wall Street speak for we're just helping the market tick along. Bloomberg's ETF whiz, James Seifert, chimed in saying that the numbers we're seeing are just a snapshot of what JP Morgan held on March 31st. The real deal could be way different since these figures don't show any short positions or derivatives. It's like trying to guess someone's net worth from a single bank statement. You're not getting the full picture. And then there's Eric Balchunas, another ETF guru from Bloomberg, who's pretty stoked about the sheer number of holders for the IBIT ETF. We're talking 250 holders in its first quarter, which is nuts. He also dropped a hint that we might see other big banks showing off some holdings, but that's more about them being market makers rather than them diving headfirst into Bitcoin. To top it off, this whole reveal from JP Morgan happened just as Wells Fargo, the third musketeer of American banking, spilled the beans on their own Bitcoin ETF adventures. It's like when one friend starts a diet and suddenly everyone's counting calories. Banks and Bitcoin, who would have thought, right? Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. All right, crypto crew, Bitcoin this week was all over the place, like a rogue shopping cart careening down a grocery aisle. Prices dipped below 60K, sending shivers down some spines, but then bounced back like a boss, currently chilling around $60,800. Wild, right? The past few days have been a real mixed bag. We saw a price drop on Tuesday, hitting a low of $60,687, but then Bitcoin did a complete 180 and started climbing. Today, it calming back to $60,800 again, before taking a little breather. So, what's the deal with all this volatility? Well, a couple things. The stock market's been jittery lately, and Bitcoin tends to follow its lead. Plus, there's some uncertainty about the Fed raising interest rates, which could make Bitcoin a less attractive option for some investors. But hey, despite the short-term ups and downs, I'm still a Bitcoin believer. This orange boy has the potential to be a major player in the future, like a digital gold standard. There might be some bumps on the road, but Bitcoin ain't going anywhere. Remember, this ain't financial advice. Do your own research. But if you're looking for a long-term investment with high return potential, Bitcoin's worth considering. As for today, I'm feeling cautiously optimistic. Prices seem to be calming down, and I wouldn't be surprised to see Bitcoin break above $63,000 soon. Of course, I'm keeping an eye on the stock market and the Fed, because those can still throw a wrench in the works. So what do you guys think? Bullish or bearish on Bitcoin? Let me know in the comments below. And if you have any crypto questions, hit me up. Now, let's chat about Wells Fargo's latest move in the Bitcoin world. So, they've just filed with the SEC, and guess what? They're getting into the Bitcoin game with spot Bitcoin ETFs. That's right. They're holding on to Grayscale's spot Bitcoin ETF, ProShares Bitcoin Strategy Futures ETF, and even shares in Bitcoin Depot Inc. It's like they've got a treasure map and they're marking all the spots where X marks the Bitcoin. Now, these spot Bitcoin ETFs are pretty cool because they let investors ride the Bitcoin price wave without actually owning any Bitcoin. It's like having a virtual piece of the pie. And it seems like Wells Fargo isn't the only one at the party. Big banks and financial institutions are all lining up to get a piece of that sweet, sweet Bitcoin action. But here's the kicker. Earlier this week, Susquehanna International Group threw down the gauntlet with their SEC filing, revealing they've got a massive $1.8 billion in spot Bitcoin and other Bitcoin ETFs. That's billion with a B. It's like they're saying, hey, we're not just flirting with Bitcoin, we're going steady. So what's the big picture? Wells Fargo is joining the ranks of the financial bigwigs who are diving headfirst into the Bitcoin pool. They're not just testing the waters, they're doing cannonballs into the deep end. And with Susquehanna's big reveal, it's clear that the Bitcoin bandwagon is getting pretty crowded. It's a crypto gold rush and everyone wants in on the action. Raphael Bostic from the Atlanta Fed gave us the lowdown on interest rates. He's like, we might cut rates this year, but don't hold your breath. The economy's been a bit of a wild ride with prices going up more than the Fed's comfy with, but Bostic's got a hunch things will cool down. Businesses are telling him they can't keep hiking prices, and wages should chill out to pre-pandemic vibes. Jobs are still booming with 175,000 new ones in April, but that's got to slow for inflation to hit the sweet spot of 2%. Bostic's playing the long game, thinking maybe just one tiny rate cut later this year. He's all about waiting for a clear sign that inflation's on a steady march back to 2%. The bigwigs at the Fed will powwow in June to figure out the next move, but Bostic's betting it'll be a slow roll back to normal, aiming for 2025 or 2026 to hit that inflation target without tossing too many folks out of work. So there you have it. Bostic's optimistic, but ready for a bumpy ride. And he's urging patience while the Fed keeps an eagle eye on those inflation numbers. So, Sam Bankman-Fried, the FTX bigwig, is in the hot seat, but swears he's clean, even with a 25-year fraud sentence hanging over his head. He's appealing, of course, and has turned into a rice trader in the clink. Yeah, rice, not crypto. The guy's a veggie, and prison grub isn't exactly gourmet, so it's beans and rice on repeat. He's even joking that prison trading's a breeze compared to his old high-stakes crypto days. SBF's got his game face on for interviews now, making eye contact and all, but admits he's just faking being okay. He's rooming with a bunch of other guys, and it's pretty dull. Just a few TVs and a tablet with no internet. He's not too worried about his safety, but sleep's a luxury when you're the go-to guy for the midnight rice exchange. His lawyers are on the case, and he's convinced he's just a scapegoat for FTX's crash. No regrets over the lost billions, he says. He's hoping to stay put in Brooklyn's MDC till his appeal in July. But A cross-country bus trip to a Cali prison might be on the cards, which could take months. Talk about a long ride. And that's the scoop on SBF, prison life, legal drama, and a whole lot of rice dealing. Let's talk about Bybit's latest move. They've just dropped their 10th Proof of Reserve report, and it's pretty clear they're all about keeping things crystal clear for everyone. They're not just talking the talk, they're walking the walk with a full 1.1 ratio of user assets. And they've even got a bit extra tucked away for rainy days. Here's the scoop. Bybit's user Bitcoin stash grew by a cool 580 BTC since the last checkup. And when it comes to the big players like BTC, ETH, Sol, and the stablecoins, they're sitting pretty with reserves over 100%. That's like having a spare tire and a half, just in case. Reputation-wise, they're scoring top marks. CoinGecko gave them a perfect 10 out of 10, and they snagged an AA from the CC Data Crypto Exchange benchmark. That's like being the valedictorian of crypto exchanges. To keep all that digital dough safe, they've got a mix of cold, warm, and hot wallets. It's like having a security guard, a safe, and a quick getaway car all in one. And with over 25 million users, they're not just a big deal, they're a huge deal. In short, Bybit's proving that being open and secure isn't just good for them. It's great for the whole crypto scene. They're setting the bar high, and it looks like this trend of transparency is here to stay. Cool, right?
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.